Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about the different account types at IronFX and more generally, right? Should you pick an account where there are lower spreads, but you need to pay a commission, or should you pick one where there are higher spreads, but you do not need to pay a commission? Now, a common misconception people have is that, when it comes to trading, you need to pick the account, right? The trading account. You need to pick the trading account with the lowest spread, right? So there tends to be a lot of people who gravitate towards like ECN, STP accounts, right? Those that put your orders straight through to the liquidity provider, right? And in return, right, because of the low spreads, right? So in this kind of cases, you usually see spreads on euro dollar going as low as like even 0.0 pips, right? But in exchange for that, you need to pay a commission, right? If I'm not wrong, round turn, you got $4, $5, $6, $7 round turn, right? But the important thing is that you do need to pay a commission, and usually, it costs quite a bit. The commission costs quite a bit. Then on the flip side, right? On the flip side, you have the usually it's called a classic account, right? But rather accounts that don't require you to pay a commission, but in return, your spreads are slightly more. Meaning that when you take a trade on euro dollar, instead of maybe 0.0 pips spread, you have a spread of maybe 1 pip or 0.8 pips, right? Basically, that you have a wider spread compared to the ECN and STP accounts, right? So that the misconception is that you should always go for the lower spread. But let me share with you a certain perspective, that from an institutional perspective, what I think about this, right? Both accounts are good, but which one suits you better depends on the trading strategy that you have, and importantly, how sensitive it is to pips. For example, if you have a trading strategy that is it's a scalping strategy, meaning that you have a really tight stop loss and a really tight take profit, right? For example, you have 5 pip stop loss and a 5 pip take profit, right? There are many strategies that are like this, and if you have such a strategy, having a low spread would help. Would really help, because if you have a low spread and for example 0 pips spread, right? Getting in and out of a trade, you don't feel too much of a pinch, right? But if you had a classic account, right, the moment you get into a trade, because of the spread is like something like 1.5, right? That means just because of the spread, when you get into a trade, instead of a 5 pip stop loss, right, you only have a 3.5 pip stop loss to go to, because of the spread. So if price went just 3.5 pips against you, plus the 1.5 pip spread that it might have, right, you'll be stopped out. Now, you might not think that is serious, but 1.5 pips is actually 30% towards your take profit, right? So in such a circumstance where your trading strategy is very spread sensitive, that is where you very, very much more likely need to what's the word here? Sorry, the mic was just bugging out a bit. It's very, very much more likely that you need to get an account like the ECN account, STP account, where your spreads are kept really, really low. On the flip side, right, if you have a trading strategy where your stop loss and take profits are anything more than at least 15 or 20 pips, you might want to consider the no commission accounts. So in these accounts, they're the ones where you don't need to pay a commission, but your spreads are slightly more, right? Because let me explain it in the form of an example for you, right? In this case, right, if you have a trading strategy where your stop loss is like 100 pips and your take profit is like 100 pips, right? having a spread of 1.5 pips is not going to make much of a difference, because that is, barely even 1%, right? I mean, a little bit more than 1% of your entire trade, right? It's much better to trade without having to pay any commission, right? Because in these kind of cases, right, your trading strategy is not spread sensitive. You don't need to pay for the luxury, right? You don't need to pay for the luxury and the premium, right, of having low spreads, right? So this is a very, very important consideration for you guys, which account type you're going to pick to trade, right? Don't just pick the account with the lowest spreads, right? Instead, go for the one which suits your strategy better. If your strategy, is super spread sensitive, in and out 5 to 10 pips, right? Then yes, go for the accounts, the SCP, the ECN accounts with the lowest spreads, and pay that commission, because you need to pay the premium, the privilege, to have the privilege of having low spreads, because your strategy requires it, right? However, on the flip side is that, yes, if your strategy is one where you're day trading, your swing trading, your trades last for a couple of days and even a couple of hours, you can save that money, right? Don't pay the additional commission just for the luxury of having low spreads, because your strategy do not require it. All right, guys. Anyway, that's it from me for today's podcast on choosing the correct account type for your trading strategy. Do remember to subscribe to our podcast, as here at IronFX, we're dedicated to bringing you the very best trading education to take your trading to the next level. Until we meet again, stay safe, trade safe, and peace out, guys.